Any intelligent fool can make things bigger, more complex, and more violent. It takes a touch of genius and a lot of courage to move in the opposite direction. Albert Einstein. My friends, we try to make things as simple as we possibly can. In fact, the training for you today is how we use complexity theory in investing and trading. Again, how we take those concepts of complexity and simplify them, boil them down into a simple understanding. What we are trying to do here is very straightforward. We are simply looking to follow trends, particularly weekly vertical crossovers. That is the gold vertical line that you see on the charts. That happens when the price percent oscillator, that is our blue line at the bottom half of our charts, crosses over the red signal line, either up, as it recently did on the S&P 500, or down, as it did back in, when was that? Back in at the end of February. So again, what we are trying to do, and we go back in time and we look at how accurate these crossovers have been. There are points in time where things can get less accurate, as we saw where things bounced over down, although we did have some opportunities back in September of last year. Then they punched up very quickly in October and then down again in November and then shot up for quite a while. So what we try to do is we look at charts, we backtrack. That means we go back in time and we see how accurate those weekly vertical crossovers are. Then we use that information to help us make decisions on entering into trades on those charts. And again, you can do this with your favorite stocks, your favorite ETFs. We track 4 here, and we've thrown in Bitcoin here lately. That is the S&P 500 down today, the Nasdaq 100 down today, 20-year bonds down today, and gold down today. Those are the 4 ETFs that we track on a regular basis here. Lately, we've also been tracking Bitcoin for you. Let's start with the S&P 500. Now, we had a weekly vertical crossover that crossed over going up back on the week ending the 9th of April. And it is down a little bit for the day, 0.02%. We see the price percent oscillator has been flattening over the course of this week and the prior week, although we did reach a higher high last week, which is good to see. Derivative oscillator still gaining some upward momentum. You will know, if you want to know what these oscillators are about, the PPO is a percentage version of the MACD, the moving average convergence divergence indicator. For some of you, that'll mean a lot. Others, it'll mean absolutely nothing. We explain it quite well in our book. I'm also going to put at the end of today's video, I'm going to give you 2 good training videos. Those are going to be on the price percent oscillator and the derivative oscillator. Derivative oscillator is a triple smooth version of the relative strength index. It's the very bottom of our screen. It's these lightened green and red rectangles that show you either increasing energy in the derivative oscillator or energy that is devolving. And again, these trainings I think you will find helpful. They'll be at the end of today's video. And for our subscribers, like I said, we've got that complexity theory video for you. It's in your show notes. If you're not a subscriber, go to chartingwealth.com, sign up. Then you'll know more of what things are about. You can also see a link in there to purchase our book, Charting Your Way to Wealth. We appreciate all that support. That's where we are on the weekly on the S&P. What's up with the 2-day? We look at this latest 2-day candle. Things are moving up as far as the candlestick goes on the 2-day. Now, we broke through a nice 6-period, 12-day trend line that was very helpful. We broke through that for 4 days. We've started moving up again. That is good to see. Price percent oscillator is flat. Derivative oscillator losing momentum. Look at this half-day chart. Haven't had enough energy yet for that to cross over going up. Still negative. Derivative oscillator just barely negative. So we'll see how things go for the rest of the week. And if on Wednesday itself throughout the day, potentially Thursday and Friday, we have some slamming up movement, which would be nice to see on the S&P 500 as represented by SPY. We'll keep our eyes and ears out for that occurring. But as far as our weekly chart goes, we see, again, it is flattening, weakening a little bit. Same with the 2-day still, though both those charts are positive. So we're positive on where the S&P is. We're just, again, paying attention, making sure that things continue to move in the right direction. Now, before you get into any trade, if you follow the rules we established, you set your profit and loss bands at that point, and then, of course, you let the charts guide you. That is why it's so critically important as you're learning to fill out your trade worksheets. Those are available. Those PDFs are for free in your show notes each and every day. That's where we are on the S&P. Let's go to the Qs. The Qs crossed over at the end of the week, just barely. It did make for a crossover. Things are down a little bit, 0.43% for the day. Price percent oscillator still just over the red signal line. Derivative oscillator gaining upward momentum. Green candle forming, so that's good to see. Price is just right there on that weekly trend line. We look at the 2-day chart. We can see where price is just above the weekly. Again, we broke that nice 6-period, 12-day moving average, but things like the S&P have been moving up the last 4 days. Price percent oscillator is about flat. Derivative oscillator positive, but losing momentum. Half-day chart still negative, hasn't crossed over yet. We saw some indecision in the morning, trying to move up some and then rolling over in the afternoon. Derivative oscillator, nonetheless, is still positive for the day. So we'll continue to watch, see how the Qs develops. All the main rules still to be applied regarding profit and loss bands. Let's go to 20-year bonds. They were down for the day, 0.87%. Now things are appearing to be crossing over so far this week. Still, it's not as strong as it was yesterday because things were down a little bit. 2 days in going into the hump day. As I record this, of course, I record these after the market closes for the next day. So the market closed on Tuesday. This is being recorded for Wednesday. Price, again, right there on the weekly chart, right there on that 2-day trend line, derivative oscillator gaining upward momentum. 2-day chart, we can see where price is sitting right there on that 2-day trend line. We do have a red down candle. Price percent oscillator still positive, heading up a little bit. Derivative oscillator still positive, losing some momentum. Half-day chart, we can see where there was an acceleration in down movement in the morning, followed by more in the afternoon. Penetrated the 2-day trend line, but did not close below it. So that is where we are on bonds. Again, we have that crossover. Looks like we might be able to confirm it by the end of the week, but let's see how the rest of the week develops. Gold down 0.25% for the day. By the way, bonds were down 0.87. I think I mentioned that. But gold down just a little bit, 0.25%. We had that weekly vertical crossover in gold on Friday. This last Friday, we have a red open box forming. That's a slowdown in the up movement. We see that the price is above. The candle itself is sitting right there on the weekly trend line. Price percent oscillator trying to pull away from the red signal line. Derivative oscillator gaining upward momentum. On the 2-day chart, still upward movement on the price percent oscillator. Derivative oscillator positive, losing a little bit of momentum. And we can see where this latest move by gold popped outside our prior 2-day trend line that was connecting 8 days worth of movement. We have a red doji right now. That's lots of indecision tending down, but this price percent oscillator still moving up. That's a good sign. We see on the half-day chart where things had moved up through the morning on Tuesday after upward movement on Monday, and then rolling over in the afternoon. So again, we'll continue to watch. Price percent oscillator still heading down strongly on that half day. And again, that's our smallest and weakest of charts. Derivative oscillator gaining downward momentum. So keep your eye again on the prize. What about Bitcoin? Up second day in a row. Not a lot for Bitcoin. 2.50%. Bitcoin, however, still Strong red down candle. The biggest red down candle that we have seen in many weeks, many months. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. 2-day chart. This is, again, a slowdown in the down movement. This solid green candle doesn't have a wick on top, just a wick on the bottom. But that is again, a slowing down in that down movement. Derivative oscillator gaining downward momentum. Price percent oscillator still heading down. And we can see over the last day and a half, we've got up movement in Bitcoin after things bottom there on Friday. So we'll continue to watch. We still have that overhang of lots of downward pressure on the weekly and the 2-day. That's where we are, folks. Again, if you're new to the channel, one of the quickest ways to get up to speed is to buy our book. You'll see a link in the show notes. And of course, subscribe for free at chartingwealth.com. That list is never spammed, never sold. And of course, you get the latest of everything there, plus our daily trainings, the links to our PDFs for your daily market worksheet, weekly market worksheet, trade worksheet, and of course, you get our daily trainings. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Thank you, Patreon supporters.